Underwriting is not AI. So when companies are out there talking about like AI underwriting or AI engine, right? You can even look at AUS. Like when you go to Fannie and Freddie, when you go to LPA or you go to DU, this is, I know we've talked about it over the years as a black box because we can't see inside it, but gang, I hate to tell you this, but there's no magic here. The reality is these are rules that are set up to be evaluated based upon the data being fed into the evaluation. We're not projecting some interpretation of this. We're not forecasting some statistical analysis of what the borrower's ability to be able to repay that loan is. It's a mathematical calculation. Either the borrower has sufficient ability to repay the loan or they don't, or there's a sufficient documentation in the file to support their ability to repay, or there isn't. And so when we think about underwriting, for those, if we leave mortgage for a second, if we talk about insurance, right, whether it's life or property, or title, the underwriter of that file is really focusing in on, does this meet my guidelines? And if so, what do I do about it? And so when we talk about underwriting in this workshop, I want you to be pragmatic about what your underwriter is doing. They are evaluating the data that's being presented to them. And don't be confused, a document is nothing more than data. So when we look at a pay stub, it's the data. When we look at bank statements, it's the data. And so if you buy into that argument that we're really just reviewing the data, and we know that underwriting is nothing more than a set of rules, how quickly can you have the data evaluated in your file to determine the underwriting outcome? How quickly can you pivot your workflow so that as soon as that data is present in the file, we can make at least a partial underwriting decision on that loan?